Alright, welcome back to my channel. I'm so delighted to welcome you once again to my channel. I still remain my humble self, Austino FX. So in today's video, I am going to be sharing with you my 10 years trading advice for beginners. I'm going to structure it in the way that you are going to understand it perfectly. So my candid advice to you guys is to pay clear attention so that you will understand everything this video is talking about, because in this video I'm going to break down my 10 years trading experience and how I became profitable after 10 years, so that you will cut the long process of becoming profitable. So stop whatever you are doing, bring out your pen and jotter so that you can jot down important points from today's video. Remember, this is an educational video on forex trading, so whenever you're watching, make sure you have pen and jotter so that you can jot down some important and relevant points from this video. So I'm going to share my screen with you guys and show you what we are going to discuss in this video. So here, like the title said, my 10 years honest trading advice for beginners, 10 main ideas from 10 years trading experience. So if you go through it, you see that these are 10 main ideas from my trading experience. These are 10 main ideas from my trading experience. So I'm going to treat them one after the other. So pay clear attention so that you understand it perfectly. All right? By doing so, you cut the long process, right? Because trading takes time. But if you have the right mentor and the right guidance, it won't take long like others for you to become successful in this business. So let's start from the first one. So the first one here says, trading isn't glamorous. Despite the flashy lifestyle portrayed online, trading is difficult and will test you mentally and emotionally in an unexpected ways. So let me read it again. My first idea is this: trading isn't glamorous. Despite the flashy lifestyle portrayed online, trading is difficult and will test you mentally and emotionally in an unexpected ways. Now let me show you example of what I'm talking about. Now if you go through the social media like Facebook, Instagram, TikTok, or even YouTube, you will see different traders showcasing their lifestyle. So the example we are going to use here is Jeffrey Benson and Happy Forex. You know these guys, they are very popular traders. Jeffrey and Happy, they are very popular. So these guys, they show lifestyle on social media, and so many newbie traders get entangled right into the game, not understanding what it takes, not understanding what it takes to be a trader. You can't just jump into what you don't understand, right? If you do that, you're going to mess up. So when they watch the lifestyle of these guys, right, when they watch their lifestyle, you can see like this one. I can see Happy on his truck, cyber truck, right? You can see, go on social media, you see them flexing with different kinds of cars, expensive mansions. You understand what I'm talking about? So you will not even have the time to learn. You want to be like them overnight. The essence of this lifestyle is just for motivation, but many people are reading it the wrong way. Jeffrey Benson and Happy and others who are showing their lifestyles on social media are doing that just to motivate beginners, to tell you that there is bright future in this business, there is hope. Not telling you that the future is just now, that if you start today you become like them. That is what I'm talking about. Like these guys, it takes them years for them to get to this level. A journey of 1,000 miles begin with a step. You start small till you get to that level. Just like the evolution of human. Before you become a man or a woman, you must go through the evolution of life. First, your mother had to conceive you in her womb. She has to carry you for 9 months, give birth to you. Then you have to go through the process of evolution, like sitting, crawling, standing, running, walking, and then start building your sensory. Gradual process that also implies to trading. You must understand everything about trading. You must have a package of trading before you can think of this kind of lifestyle. You understand what I'm talking about? So this is what so many newbie traders are facing. They just jump into this lifestyle thinking that if you start trading today, tomorrow you become a millionaire. So this is the wrong aspect of it. So that is why I said here, trading isn't glamorous, right? Trading isn't glamorous despite the flashy lifestyle portrayed online. It's not easy. It's not what they are showing you. They are showing you the glory, but they are not showing you the pain. You know, nobody will come out to tell you that he's suffering, but people will come out to show you their lifestyle, that they are making it, they are blowing, they are making it, but nobody will show you the pain that brought them to that level. So that is what so many traders, especially the newbie, do not understand about trading. So they never understand that trading will test you mentally, it will test you emotionally in an unexpected way. You are going to go through pain of losing, because you are going to lose, right? Pain of disappointment, because the trade will go against you. So you have to bring yourself, understand everything mentally, psychologically. You need to be prepared for this business. You don't just jump in because you are seeing lifestyle on social media like Jeffrey Benson and Happy. You are seeing them on Facebook, Instagram, driving expensive cars, wearing designers, flexing around, and you think that they just got to that level overnight, not knowing that they paid a supreme sacrifice for them to reach that level. They went through a process to get to that level. So that is the idea I want you to understand, and that is the reason why so many guys are blowing their account. They don't understand money management because they want to be like these guys. For instance, now if they watch their screenshots of the trades they take, they will say, wow, look at Happy just made $100,000 in one trade, and you want to go and reach $100,000 in one trade. Or more, think about it now. Think about it. These guys have capitals. Like they have capital. Like I said, they are still maintaining the 1% rule, but their capital and your own are not the same. So why do you want to be like them overnight? You just enjoy their lifestyle, take it as a motivation, but don't rush to be like them. Take it slow and steady, because these guys have capital. So if you check, you see that for them to risk $100,000 per trade, just what is the 1% of $100,000? Do the calculation. You see that they have up to $10 to $20 million in their trading account. These guys, they have up to $10 to $20 million in their trading account. So with $10 million, they can risk $100,000 per trade, and it's still 1%, because it will take them 100 losses before they can blow their $10 million account. So you that just have an ordinary, maybe let's say $5,000 account or $10,000 account, you just want to throw everything in because you want to become rich overnight. That is not how it is done. So take note of this. Don't accept everything you see online, right? Just take it as part of entertainment. Just go and entertain yourself, watch the lifestyle, but don't believe what they are telling you that you become rich overnight. Just watch the lifestyle, understand the lifestyle, and take it as a motivation. So that is it. Don't allow it to influence you into negativity. Just take it as a motivation. that you are going to work hard and you believe one day you will be like them. That is it. So that is why I say trading isn't glamorous. It's not what they are showing you that is happening. Those that are into trading knows what I'm talking about, right? Then number 2, early overconfidence lead to losses. Early overconfidence lead to losses. They lost half their account in one trade by risking too much. So it says here, the speaker lost half their account in one trade by risking too much without a stop loss, learning that trading is about protection, not boldness. Right? So early overconfidence leads to losses. So what is another advice that you need to take home? That is early overconfidence. Like if you make small profits in your early stage of trading, you become overconfident. You start over risking without putting stop loss. You start trading recklessly, forgetting that trading is very risky. It's unpredictable. Now you start trading without a plan because you want 2 or 3 trades in a row and you think it is going to happen the same way, and you start risking too much. That is early overconfidence, because when you start, the market will first test you. It will test your emotion. It will first give you profit, and then it will now welcome you into the business. So that early profit, if you misuse that opportunity because you made early profit and you start over risking yourself, because what does it mean to place a trade without a stop loss? That is too much risk, man. Too much risk, because the market can move so many pips against you, especially if you are trading gold. The market can move so many pips against you. So if you don't have stop loss in place, it can wipe out your account a matter of time. So those of you that are trading gold, if you go to gold market, you see that gold moves like magic. Like gold can move 200 pips in 15 minutes. Gold can move 500 pips in 15 minutes. So if you say, okay, let me place my trade and go and shower, maybe when I come back, I will put stop loss. Before you go and shower and come back, your account is out. You have wiped out your account. That is just what you don't understand about this business. That is what you don't understand. That is why I say, for you to become profitable, calm down and learn. Learn trading. Calm down and learn trading. Don't rush. Get yourself a good mentor, someone that has the skill, the knowledge, so that the person will groom you to become a professional, disciplined trader. So don't allow early overconfidence to drain your brain, because early overconfidence will lead to losses, and that is failure, because nobody wants to lose all the time. So don't allow early overconfidence to make you lose your hard-earned money. So you need to learn that trading is all about protection and not boldness. You need to learn that trading is all about protection and not boldness. Honestly speaking, it's very, very important that you learn this. For you to become successful, you should learn to protect your capital. It's very, very important. So that is why stop loss is very important. The brokers that put stop loss in place, they have reason, because stop loss will help you. It's just like driving a car without a brake. Just think about it. Trading without a stop loss is like driving a car without a brake, because when you overspeed without brake, you can get into accident and kill yourself. Just like trading, if you over risk without stop loss, you will blow up your account. You understand what I'm talking about? So take our time to understand this. Like I said, jot down these points, jot them down. Very, very important. Very, very important. Jot them down. So let's go to the third one. Number 3 says, no perfect strategy exists. Instead of jumping between systems looking for a holy grail, focus on building an approach that works across different market conditions. So now, what do you mean by perfect strategy? Perfect strategy is when people tell you that they have the magic formula, the holy grail in trading. To be sincere with you, there is nothing like that. There is no perfect strategy. There is no holy grail. Instead, you need to have an edge against the market, because market condition changes. So one strategy cannot help you. You have to adapt to market condition. So that is why there is no holy grail. There is no perfect strategy, because some gurus will come out there to tell you that they have courses. They want to say to you the holy grail, the perfect strategy, that once you buy this course, you become a millionaire overnight. In fact, you'll be making profit in trading. That is capital lie, because there is nothing like perfect strategy. No perfect strategy exists in trading at all, none. So instead of jumping in between the lines looking for the holy grail or looking for the perfect formula, build a perfect trading system, a perfect trading approach that works across different market conditions. In my previous video, I taught you about mastering price action, right? So price action is a trading strategy on its own, right? So you can either practice it, master it, or you can practice moving average, or you can practice RSI. These are trading indicators that traders use to trade. So it all have to do with your perfection, which one you are good at. So no perfect strategy exists in trading. Like I said, if you want to have your trading strategy, pick one that you can master, either price action, moving average, or RSI, relative strength index. Pick any one, master it, build a system that has an edge. That is how you become successful in this business. So don't allow some gurus to brainwash you and take your money away. Don't allow them, because some of them will just brainwash you. They will tell you they have the perfect strategy. Just sign up this account or buy this course and you get it. That is capital lie. So you should understand that there is no holy grail in trading. There is no perfect strategy in trading. So trading has to do with development. You develop your own strategy, master it, because every trader needs to have his or her own trading strategy, right? So in your trading strategy, or should I call it trading arsenal, so your trading arsenal has to do with everything you need to become successful in trading. It has to do with your risk management, your money management, your psychology, and your simple trading strategy that you will repeat consistently. So trading has to do with development. You have to keep developing yourself until you become perfect. So you don't look for the perfect or holy grail. You develop yourself to become perfect. So just take this from me. I'm telling you the fact. There is no perfect strategy in trading. So all you need to do is to pick out one strategy and do what? Master it, so that you can understand it perfectly well. Just master it, understand it, and make sure it has an edge in the market. You understand? It has an edge in the market. Just like my previous video, I taught you so much, like risking 1% to make 3%. That is an edge, because even if the market is against you, even if you lose 7 times and win 3 times, you are still profitable. That is the edge we are talking about. So you must have an edge, because no matter the strategy you bring to the market will still wipe you out if you don't have an edge. If you don't master risk management and money management, no matter the strategy you have, the market will still take you out, because it is unpredictable. So you just play with your experience, you play with your knowledge. That is why it's necessary for you to understand all these things that I'm telling you. So jot them down. Find and stick to your edge. I said it before. Find and stick to your edge. Develop a simple, repeatable advantage that works often enough over time. Then commit to it instead of chasing magic formulas. So for you to become successful in this business, you have to find a strategy that has an edge. Find and stick to your edge. Develop a simple, repeatable strategy that works for you, something you can repeat consistently. That is what I'm talking about. Something that works often enough over a long period of time. So that is where backtesting comes in. So that is why in all my videos, whenever I teach you a strategy, I always tell you, go and backtest it. Go and backtest it. It's very important because backtesting gives you confidence. So when you have backtested a system for a long period of time and see that it's working, there is 90% chance that it will work in the live trading. So you have to backtest because it gives you the courage to trade that strategy because you have already done the backtesting, right? You have done the backtesting and you are perfectly sure that it is working, it has an edge, so you cannot implement it in a live account. So that is why it says here, find and stick to your edge. There's so many trading strategy all over, like there are different trading strategy. Just find the one that work for you. Like me, I've tried so many strategy, but I must tell you the truth. The perfect for me, the perfect strategy that I normally use is the price action. I prefer the price action because I want to watch the naked market to know what the market is doing. So for me, my own strategy is price action alongside with money management and risk management. So it now depends on you to find an edge that works for you, right? So it's very important, like I said, develop a simple trading system that has an edge that you can repeat consistently, because success in trading is all about consistency. You have to be consistent in your trading. Don't be changing strategy. Not today you are doing this strategy and you do not find success in it, you throw it away, you go and pick another strategy and you start that one and you do not find success in it, you throw it again, you go and pick another armor. You are just jack of all trade, master of none. You're just beating around the bush, beating. So for you to be successful, commit yourself in a simple trading strategy that has an edge. Take our time to master it instead of chasing the magic formula, looking for the holy grail. Pick that strategy that you already have, find an edge, backtest it, master it, and trade with it, and I promise you are going to be successful with it once you maintain risk management, money management. So that is it. So you must master your own trading strategy so that you can trade it perfectly without any worry. So backtesting is very important. Backtest your trading strategy, make sure it has an edge. So like I told you, some people will say, what is an edge? Okay, let me explain. An edge is something that has an advantage against another. Like you have an advantage against the market. That is what we call an edge. So every trading strategy must encounter winning and losses. What is your edge? Your edge is risk reward ratio. Simple. That is your edge. Risk reward ratio. So what is the percentage of your winning? What is your win rate? Right? If you have 40% win rate and you have a risk reward ratio of 1 to 3, you are still profitable. You understand what I'm talking about? So the secret now, let me be sincere to you, the edge is risk reward ratio, because every trading strategy encounter winning and losses. So if you want to have an edge against the market, you must have a good risk reward ratio from 3 and above. That is to say, you are risking 1% to make 3% and above. That is the edge we're talking about. So that is it. So let's go to the fifth one. Fifth one is risk management. Risk management is everything. You can see it here. Risk management is everything. The most critical lesson is to risk small amount per trade, so you can survive losing streaks and trade another day. I've said this before. Risk management is everything in trading. everything in trading. No matter the perfect strategy you think you have, if you don't have a good risk management, there is no way you will survive. Because think about it. Now the sixth idea says small risk faces psychology. Small risk faces psychology. Most discipline problems stem from risking too much. Trading smaller sizes keeps your mind calm and helps you follow your plan. So, do you understand what this means? Now, when you risk small, it fixes your psychology. It makes you to trade with calm mind. You feel relaxed because you are trading with small money. Just like if you have $10,000 and you're risking just $100, you trade with a calm mind. You will not be trading with panic. You will not be trading and you'll be panicking. You'll be scared. You calm down and trade because you know you are risking just 1%. Because even if you lose, you still have enough capital. You can still place again. Even if you lose, you can still place again. So you calm down, and this will help you to follow your trading plan. You don't trade in a rush. You don't rush into the market. You don't take your trade as fast. You plan and follow your trading strategy. But if you are risking too much, you may not have a relaxed mind. You won't have a relaxed mind. If you are trading too much, you won't have a relaxed mind. Very, very important. So that is why it's very, very important that you risk small so that to fix your psychology in trading. Because the problem, like I said, that most traders have, the discipline problem they have is when they are risking too much. That is why you see some traders, they will be panicking. Those people risk 20 or 30% of their capital. That is why I see they are scared. Because they know that it's just 4 trades or 3 trades, they are gone. Those are the people that you see that they will be panicking when they place trade. You see that they will be shivering. They will be shivering because they know that if they lose 3 trades, their account is gone. But think of someone that is risking 1%. You know that it will take you 100 times. So you relax. You relax and trade. So that is it. So number 7, prepare, don't predict. So nobody knows where the market is going. Like I said, nobody knows where the market is going. So you have to prepare yourself and don't predict. Because if you predict, you are gambling. Right? So that is why it says here, prepare, don't predict. Nobody knows where the market is going next. Instead of trying to predict, know your setups and rules and then wait for the right condition. Know your setups and your trading rule and calmly wait for your right condition to execute your trade. So you don't predict, you don't rush the market. You have to plan yourself. Have a strategy that works on each market sections, because we have different sections. We have when the market is trending and when the market is ranging. So you don't use the same strategy in the both, right? The strategy you use on a trending market is different from a ranging market. For instance, if you are using the moving average crossover, you know that moving average crossover does not work on a ranging market, because if you are trading with that, you are going to get so many whipsaw, and whipsaw will cause the price to be crossing above and below the moving average, and it will give you so many wrong signals. So if you keep buying when it cross above and keep selling when it cross below, you keep getting losses, because the market will be stopping you all the time. But if you trade the moving average during a trending market, like if the price crosses above the moving average, you take a buy trade when the market is trending. You see that the market will respect the trade and continue going up, because the market condition is trend. The market is trending at that moment. Or if it's trending down and the moving average crosses below the price crosses below the moving average, you take a sell trade. It will respect it and keep going down, because the condition there means the market is trending down, not when the market is ranging. So you have to understand market condition. That is, in other words, we call it market structure. You need to understand the market structure before you execute your trade. So you don't predict. You don't just predict trading. You prepare. You take a time to prepare the trade, analyze the trade, understand where to place a trade, because every trader places trade at an area of value. And what is an area of value? It can either be support or resistance, moving average line or trend line. That is why I call it an area of value. So that is where you are expected to wait for price to come for you to take a trade. So that is why preparation is very important in trading, not prediction. You don't predict, you prepare. Very important. Then number 8, build a trading toolbox. Different market seasons like trending, ranging, volatile requires different strategy. So prepare multiple approaches. Just like what I said before, you have to build a trading toolbox for different market season. So you have the strategy for a volatile market when there is news, because volatility is when there is news. You prepare a strategy for a volatile market, you prepare a strategy for a ranging market, and you also prepare a strategy for a trending market. You see how it works. So you must have a strategy that works on a market condition. You don't use a strategy that doesn't work on a ranging market and apply it, because if you do, you are going to get so many losses. So that is why you have to build a trading toolbox. Understand the market you are in. If the market is ranging, then look for strategy that applies to a ranging market and implement it. But if the market in that particular condition is trending, then you look for a trending strategy that applies to that market. Don't just be trading randomly. Like I said before, predicting. No, it doesn't work that way. You don't predict, you don't trade randomly. You must understand the market condition before you can analyze it. Understand the market condition. That is to say, know whether if the market is ranging or trending. So to know the strategy that you are going to implement. That is why I say you need to build a toolbox. Different market season. A toolbox for different market season, for either a trending market, a ranging market, or a volatile market. So this will require different strategies that will perfectly work on each market condition or on each market season. So this one is very, very important. So this will help you to prepare yourself very well. You don't just trade anyhow, you trade with conditions. Like if the market is in a range, you look for the highs and the lows and use a horizontal line to draw them. So the market is on a range. You know that when the market gets to a resistance level, it will get rejected. So you wait for it. If it comes to that resistance level, you take a sell trade. So if it comes down to the support level, you take a buy trade. So this is what you'll be doing, because you know fully well that the market is ranging. But if the market is in a trend, you don't use horizontal line anymore. What you now use is a trend line. So you use the trend line to map or connect the lows if the market is in an uptrend. So that each time the market makes a pullback to the trend line, you take a buy trade. You only buy when the market is trending up. You only buy. So the same thing applicable to a downtrend. If the market is going down, you use a trend line to connect what? The highs. So that if the market goes down, then makes a pullback up, you take a sell trade. If the market goes down again, makes a pullback to the trend line, you take a sell trade. So in a selling market, you only sell. In a buying market, you only buy. It is only when the market is ranging that you can buy and sell at the same time. Do you understand what I'm talking about? It is only when the market is ranging that you can buy and sell at the same time. But if the market is trending up, you only buy, because if you sell, the market is going to wipe you out. And if the market is going down, you can only sell. You don't buy. If you buy, the market will wipe you out, because the market is selling, so you must sell. You don't trade against the trend. You trade in the direction of the trend. That is the game. You understand what I'm talking about? That is the game. You don't trade you don't trade against the trend. If a trend has formed, don't ever try to trade against a trend. Trade in the direction of a trend. Follow the moving trend. Don't try to trade against it, because if you do, that is the end of the road for you. So understand this. Very, very important. Then the number 9 idea is test and prepare for confidence. Test and prepare for confidence. Real confidence comes from testing your ideas and knowing what to expect, not from luck or blind faith. That is where backtesting comes in. I talk about backtesting. So if you have a trading system that you feel you love, you have mastered it, the next thing is to go and backtest it. You test it and prepare for confidence, because it is that backtesting that will give you real confidence. Right? Real confidence comes from testing your ideas and knowing what to expect. So once you have done a backtesting of the strategy that you have you have invented, once you have done a backtesting and you see that it has at least 50% win rate or 60% win rate, you know that you are good to go. You have backtested it in the market and you know that there is a chance that you are going to win 50%. So when you now apply risk reward ratio like 1 to 3, you are good to go. You see that you become profitable in the long run. So backtesting is very important, very, very important in trading, right? So test and prepare for confidence, because when you backtest, you are preparing for confidence. Not when you want to place a trade, you'll be scared. You understand? You'll be scared of placing a trade. You'll be scared of placing a trade. You understand? But once you have a backtested strategy, you don't be scared. You just place the trade. Once the condition comes and the everything lines up, you take your trade without any hesitation, because you know you have built the confidence already. So once the market comes to you, you take it immediately without wasting time. But it's only when you have not done a backtesting that your mind will be shaking, your mind will be shivering, your mind will be contemplating. Should I take this trade? No. Should I take this trade? No. In the process, you are just predicting, you are just contemplating. The market will just go against you. For instance, now especially gold moves fast. If gold comes to your area of value, like if for instance now gold is trending up and then makes a pullback to a moving average, and the market is now, the price is now at the moving average, knowing fully where it's going to reverse from there and continue going up. So the market has entered your zone where you are expected to take a buy trade, right? And you, instead of you to place a buy trade immediately, you start contemplating, you start doubting yourself. Say, if I put this trade, will it go in my favor or will it go against me? You just be contemplating. You just, before you know it, the market will just go to just reverse, boom, and start going up. So when it has now gone up, you say, hey, it has gone up, and now you rush to place a buy trade, because as the market just went up, it has gone up, it has gone up from that zone up. So you now out of should I say you don't want to miss it, you don't want to miss the trade, you now rush and place a buy trade when the market has gone up. You are putting yourself at risk, because when the market has gone up and you put a buy trade, there is still a chance that the market can still make another pullback to the same area of value. So in that process, the market will take you out. So that is why you have to make use of the time that you have. Once it comes to an area of value, take your trade without wasting time. That is where backtesting comes in. Backtest all your strategy and make sure that you have confidence in your trading. That is the only way you become successful in this business. That is the only way. So the last one, number 10, slow and steady wins. Slow and steady wins. So forget getting rich overnight. Small consistent gains compounded over time beat gambling big, and survival is more important than speed. So this last one, I have said it before, slow and steady wins. Slow and steady wins. Small profit consistently can make you a millionaire. Do you know that? Small profit consistently can make you a millionaire in a matter of 5 years or 6 years. But if you want to become a millionaire overnight, you become broke. Do you understand the concept now? So forget about getting rich overnight. Focus on small consistent gain. Those small profit is very important. Focus on them. As like I said before, small, even if it's $200 you are making as profit every day, focus on it. Be accumulating that $200. Before you know it, now within 10 days, $200 will become $2,000. Are you seeing it now? $200 will become $2,000. And if you keep on accumulating it, the money will become big, and you have enough capital to trade more and enough profit. So that is why you have to take your time to understand this. Slow and steady wins in this game. Slow and steady. So forget about getting rich overnight. Forget about it. Anybody that is telling you come and start trading and tomorrow or 1 week become a millionaire, run away. That person is a scam. Anybody that tells you come, I will train you within 1 week, you become a millionaire, run for your life. That person is a scam. It doesn't work. You take time to become successful in trading. It's not overnight. Small profit. So as you are making, you will be increasing your capital, because once you have big capital, You can take big trades. Now let me break it down. Let me just use Happy and Jeffrey for instance. Let me use them for instance now. Happy and Jeffrey, they have over $50 million in their trading account. They have over $50 million in their trading. It could be their money or investors' money. You know, most of these traders, they don't trade their money. Some trade investors' money. Investors are billionaires. For instance, now if you are an experienced trader, if you're an expert in trading, someone that has money, billionaire, can invest in you. You can say, okay, I want to wire $50 million in your account. Use this $50 million and trade. Whatever profit you make, we share it 50-50. Do you understand it now? So maybe those guys are investors. They have billionaires that are investing with them. So it comes with luck, because it's only when someone love your what you're doing, someone that have seen your track record, that can trust you with such amount of money. So getting that kind of investors is based on luck. If you are lucky enough, you can get those kind of investors. So these are the people that can make you rich overnight. Once you have built the trading skill, you are not knowledgeable in trading, all you need is just capital. So these are the people that can make you rich. But if you don't have these investors and you only have small capital, you can grow easily, small. So I'm just using Jeffrey and Happy for instance, because some people will say those guys grew overnight, because when did they come out? Just around that 2019 2020 that they came into trading. So how did they become billionaires in a matter of 6 years? That people have been in this game for 20 years, they have not reached the level of success that Jeffrey Benson and Happy have accumulated. Now lie, all those kind of things. No, you don't understand it. Those guys went through investors. That is why they got to this level faster than you can think. So maybe they did their own marketing very well and they have perfected their trading skills. So they were able to get connection with investors, billionaires that has money. So a billionaire can decide, okay, fine, let me wire $50 million into your account. Use it and trade. So when you trade, the profit you make from it will shade 50-50. You take 50% and you give me 50%. So that is it. So now with that $50 million, they will not take 1% from it and trade. So what is 1% of $50 million? Is $500,000. That's why you see them they place trade. You see them they will make you profit of $500,000. You see, you will be shouting. You don't know what their capital is. So 50 million, the 1% is 500,000. You understand what I'm talking about? It's 500,000. So that is why you see them, they risk 1%, but you don't know that they are risking 1% because the money is too big. You think they are risking everything. You don't know their capital. So now, you that has $10,000 in your account, they have $50 million in their account. You enter the same trade. They enter the same trade. You made profit with 20 pips. They made profit with 20 pips. Now see the difference. Your 20 pips gave you profit of $200, but their 20 pips profit can give them a profit of $20,000 or $50,000. Do you see how it works now? So everything is capital. So once you have the capital, that is when you can risk, but make sure the risk amount to 1%. So understand this and you know that trading is all about intelligence. So I have been able to share with you guys all the lessons I have learned in my 10 years as a trader. So I believe this lesson will help you, will guide you in your trading so that you don't make mistakes. You don't make mistakes that will wipe out your account. So make sure that you jot down every point that I've made in this video. If you do not understand, go back and rewatch it from the beginning. Use pen and jotter to jot down important points, important keywords, so that you can use them in your trading. So that is where we cut the curtain. We close for the day. This is the end of our today's video. If you love this video, don't forget to give us a thumbs up, subscribe to this channel, share this video so that others will get to see it, and also come back for more updates. Thank you so much for taking out your time to watch my video. I will see you again in my next update. Enjoy the rest of your day. Goodbye.